It is 12:43 p.m. Good afternoon, good morning, good evening, everyone. The 8th of June, 2021. Okay, so looking at ADA here, Cardano. We have the scenario that we've been that I've been talking about as a warning occur now, and again, this could change. All right. If you want a prolonged bearish corrective move, you're going to have to see some retesting. But we are below the candlesticks now. The lagging span is below the candlesticks. It's below the Tenkan-sen and the Kijun-sen, and price is currently below the cloud. All right. The last time we were below if we get a close below the cloud, that'll be the first time since December, December 24th of 2020. That's December 23rd of 2020. So that was the last time we had a close below the cloud on the daily chart. The cloud up ahead is so thin. I mean, if there is going to be a fake out, a really nasty bullish fake out where we just kind of skyrocket again, the conditions to do it are there because everything's really tightly constricted up here. There's not a lot to stop it from breaking out higher if it does decide to move. But still, I think we should look at the downside move to continue. If I want to look at where we're going to go, we just take a look at our volume profile, correlate that to fib retracements, and I want to get a couple fib extensions. So I'll use the wicks on these extensions. And then I'll do a couple without the wicks. One without the wicks, I mean. So, yeah, that $1.20 zone, like I was talking about yesterday. Oh, interestingly, we got halted. That's why I always like the body of the candles for cryptos. They're just so much more reliable. But we got support found on the 50% Fibonacci extension. The 100% extension is down at 105. And then we get this is the one that almost makes me think we're going to head down there. Is 42. The 2618 and the 886 retracement are all down there. But 120 is the next level to hold as a primary support zone. If it doesn't, then we should look out below. What is interesting here about this volume profile is if you look at how much time was spent forming this node here, to the left, and it's of lower traded volume than this node down here. And there were not many days involved in printing this. So that's why I think we would see a primary support level return around that 41-cent range. But in the meantime, 120 will get hit, and then we'd have maybe another leg lower to test the key level to hold for any continued bullish momentum is going to be 84 to 94 cents. That's the key support structure I've talked about a lot over the last few months. So watch out for that. Point and figure wise, it's a pretty steep drop across the board. So we've got the 5-cent 3-box reversal chart here on the top left, which is setting up for a bull trap. But we probably won't see that yet. There's a triple bottom break on the 2.5-cent 3-box reversal chart. And that has converted now into a bear market. So watch for a sell. And then we have the 1-cent 3-box reversal chart. Now, this one is important to watch because of what we have going on here. So 3 O's, that's a triple bottom. All right, there was a sell signal. And then we have the reversal up here. Now, this is considered a pull pattern. And a pull pattern represents a lot of opportunities. So on a pull pattern, we want to look at... go like this. There we go. Going short, as soon as it reverses... If it moves up to like the 50% or the 382... then I kind of just wait. But if we do get a 3-box reversal here, while it's at the 50% of the range of the prior O column, then the short entry is at the 3-box reversal. So right now that'd be 1, 2, 3. The short entry would be at 145. even. Where's that text box? That's only if we don't retrace any really past that 382. So there's the short. But if it does retrace higher and then we get a new column of O's, there's a catapult set up here. I don't actually know if this would technically be a catapult because it's probably too long, but you have a triple bottom break. The retest here is what's happening. That's normal. That's very, very normal. But then, yeah, if it tests lower, that's the thing. So what is the profit target? So the vertical profit target from this triple bottom break was 139. We got close to it, but we didn't hit it. If we're going to do the same thing with this new column, it's at 112 even. So there's a couple really deep retracement zones ahead for Cardano if you are looking for some fast moves. And I would imagine these moves are going to occur fairly quickly if they were to occur. Otherwise, we get a prolonged multi-month corrective move for Cardano. On the bullish side, what I was talking about on the bullish side of things is the condition of the RSI. So if we look at the RSI as remaining, as Cardano still in a bull market, the overbought and oversold levels in a bull market in the RSI are 40 and 50. And so far it's held and flattened out at 40 rather. What's going to trigger a new a move higher is when we cross back above 50 and the percent B oscillator moves above 0.8. And ultimately, really, you could probably just ignore all of that, and we just have to say, well, once the lagging span gets back above the candlesticks, that would be the true sign of a likely continuation move higher. So we really could just see this play out and consolidate over the next, because the lagging span needs to get into the business that's going on over here. So that'd be over the next 23 days, which brings us to, say 23 days, beginning of July. All right. Yeah, there you go. Beginning of July, which in Gann theory, that is a normal time to see markets change direction anyways. You often see a lot of major highs and lows in every market found around that time. The one before it is in January. So yeah, that's what I'm looking at. So anyways, first support structure that we see is that 120 zone, and then we get down to the 84 to 90, and ultimately down to the 40, mid 40 cent range is the one after that. So be on the lookout, be careful, and yeah, I'm thrilled about this actually. I love discounts, and I hope we get more of them. You guys have a great rest of your trade day. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.